So this is another video brought to you by Lake Worth Beach Mortgage. Today we're talking about condos. Some old school condos still require 25% down, and that is the call of the HOA. But if the HOA allows, and Fannie Mae says okay, a good borrower can go purchase a condo with as little as 5% down. In fact, if the borrower is a first-time home buyer, they can purchase it with as little as 3% down if the HOA qualifies. No matter what, there is no way to avoid that dreaded condo questionnaire anymore, and we'll tell you why. Our favorite lender actually pays for the questionnaire up front and the customer reimburses at closing. It all comes down to a limited versus a full review of the HOA itself. The old school way is some condos have their own rule and they'll make you put 25% down. Used to be no questions asked, but now there is still a questionnaire that needs to be filled out about the structural integrity of the building. With a full review, which is the new school version, if the HOA checks out, you can purchase a condo with 5% down and even 3% down if you are a first-time home buyer. And the most important question on that condo is how much in reserves does the HOA have? So in this situation, the key is more about the condo itself and less about the borrower. It's about the building. Does the HOA have sufficient reserves? The Fannie Mae requirement is 10% of the monthly assessments collected in reserves. It can be as low as 9.6%, and my favorite lender will round up. Otherwise, the borrower will have to put 25% down. There are other questions that can kill a deal, but this one is usually the kicker. The listing agent should know this answer, but sometimes it takes some investigating because we know what to do. And also sometimes there are special assessments that take the balance of the reserves too low. Here is a section of the questionnaire that Fannie Mae requires that is new for 2022. Basically, this all began after the Surfside, Florida condo collapse. Basically, questions about the building itself, the soundness, the structural integrity, that has to be answered now. Our favorite lender has a whole department devoted to whether or not your condo will qualify for high loan-to-value financing. Here's the process. On day one, we will disclose to you all of our disclosures as the borrower. After e-signatures, on day two, we will submit your loan to underwriting. By day three into process, we will have a conditional approval and we will begin the HOA process approval. That means my favorite lender will mail a check to the HOA to get a copy of the condo questionnaire filled out, the budget, and the master insurance. If the HOA gets denied, you can still put 25% down and close. If the HOA is approved, a first-time homebuyer can buy a home with as little as 3% down. For more information, please give us a call at 561-329-0075. Thank you.